So here we have a little trade I've been watching on the Euro US dollar. As you can see, the Euro US dollar, this is the 1 hour chart. What it's been doing, it's been kind of in an uptrend, but not really going anywhere. Very much a corrective wave. So what I am going to do is I'm going to look for buying opportunities, because what I think is going to happen is the market is going to continue moving upwards. Now we can see here we've had a lovely uh, A, B, C pattern. So typical zigzag wave here, and if you'd known how to trade it, you could have got in around here, and then you would have got this lovely move down here. So what I've done is I've drawn a line underneath the lows. These little hats you can see, these are fractals, and what they're doing is they're showing me where I've got a lower low surrounded by two higher highs on either side, or in this case where I've got a higher high surrounded by two lows on either side, and I use these to draw my trend lines. So what I've done here is I've looked at this market and I said, hey, draw a trend line from here, which is clearly a demand point, to here, which is another demand point, and once it breaks through the trend line, I'm interested in looking to do a contra trade. This is a trade which is against the short-term trend, which is down, but as you can see, the long-term trend is up, so I'm looking to get long on this trade, and my target is going to be somewhere up here, let's say about there, which is not quite the previous high, but it's pretty much in line with that high. The reason I'm not going for the exact high is because very often markets will go to a previous high, have another attempt, not quite make it, and then they fall back down. So never be too greedy. The stop I'm using on this trade is 100 points from my original entry, which is this point here. You can see the cursor, and my stop is down here, which is well over 100 points away. I'm going to add to the trade if we get to this point here, and also if we get to this point here. So my initial entry is just in here, and as you can see, it's had a reaction off it, bounced a little bit higher, and my target is up here. So how many points that is, let's have a quick look. Well, looking at this trade, you can see that's 64 points on my first contract. If it gets here, it's going to be another 30 points, so that's going to be 90 points, and if it gets down to about there, it's going to be about 120 points. I'm scaling in as the market's moving against me. This is not the same as adding to a losing position. Adding to a losing position means your trade has gone out of control and you're just adding to it. What I'm doing with this one is I've got clear points where I'm going to add in my buy position to this market, and my ultimate stop is going to be down here somewhere. So until it hits that stop, I'm going to be buying this market. Let's see what happens. Well, here we are back again, and what I did is I just dropped a stochastic, just a simple stochastic on the chart, because this trade actually is giving us a very nice example of something that is called divergence. Divergence is when the market makes a move and the oscillator that's following it, such as stochastics or Williams, actually doesn't show the same action as the price. Now, if we put some lines on the chart, you can see exactly what I'm talking about. Okay, so just putting a line here, and I'm putting another line on this current low here. As you can see, the market here made a much lower low than the market here, but the oscillator here did make a low, but it made a much higher low than the low it's now making. So this divergence between price action and market action would lead me to believe that this market is actually going to make a rebound from this area here, and if not, then I have another level I'm going to add into and another level further down. We don't know which level it's going to go at, but we do know that something's happening. As you can see, The oscillator here is now heavily into the overbought area. Sorry, it's heavily into the oversold area. I don't trust oscillators. They follow price, they don't lead them. So, you know, just because an oscillator's down here doesn't mean that this market's going to rebound. It could be that this oscillator stays all the way down here and this market just continues to go down. The only thing that makes me think that it's going to go up is, as I said, my trend line. That's the only thing that I've got faith in. Indicators and Fibonacci levels work nicely sometimes, but you've got to be aware that they're only there as guides, because you don't know which trade is going to fail and which trade is going to work. So we'll see how this trade progresses. As you can see, we're still on the same hour bar, but this seems to have a little bit of trouble getting through this area. But at the moment, everything is still open. That's why we use a stop of 100 pips. We use 100 pips because the market can move down against you 30, 60, 90 points, and you still want to be in adding to the trade. As we can see, the market here has been playing within a range of about, what's that? That's probably about 100 points, something like that. Let's just have a quick look. 150 points. So if it does come down, you know, it can come down 150 points. We've got a 100-point stop, which is well below this low anyway. If it breaks that low, then the market's going down. No longer interested in buying the market. But as long as it stays up in this sort of area, very interested in doing a contra trade in the direction of the trend, which is upwards.